Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market update for Thursday, September 15th. Stocks on Wall Street opened modestly higher, as investors seem to be taking their cues from a broad-based rally in Europe. But futures were pointing to bigger gains earlier, before the release of some disappointing economic data. The number of Americans filing first-time claims for unemployment benefits jumped to 428,000 last week, the most in nearly 2 months. The increase was much bigger than expected, and the jobless claims number for 2 weeks ago was also revised higher. Meanwhile, the 4-week average, which offers a more accurate gauge of employment trends, rose to nearly 420,000. In a healthy labor market, jobless claims normally fall well below 400,000 for an extended period.
Separately, consumer prices rose by a larger than expected 0.4% in August. The increase encompassed a wide range of goods, including gas, food, clothing, and housing. And those higher prices cut into workers' inflation-adjusted income, which fell by the most in more than 3 years last month. Excluding volatile food and energy costs, the core consumer price index rose 0.2%, in line with estimates. But over the past 12 months, the core rate is up 2%, the first time it's hit that level since November of 2008. Wall Street and the Federal Reserve watch this number more closely than other gauges when trying to measure inflation pressures.
The manufacturing sector is also in focus this morning, following 2 more reports. The Empire State Index of Activity in the New York area weakened again this month. It declined further into negative territory, bucking the expectation of a small increase. Last month, the index plunged to its lowest level since February of 2009. Separately, industrial production on the national level ticked up 0.2% in August. Economists had predicted no change. Capacity utilization, which measures the percentage of factories, mines, and utilities in operation, rose slightly, but it's still well shy of the 80% that economists say indicates a healthy manufacturing sector.
In spite of all the U.S. economic data out this morning, the focus remains on Europe. Yesterday, German Chancellor Angela Merkel and French President Nicolas Sarkozy held a conference call with Greece's Prime Minister, and then said they were confident that the country would remain in the Eurozone. And today, the European Central Bank is taking a major step to ease the pressure on the region's financial institutions. The ECB is teaming up with the Federal Reserve and other global central banks to ease U.S. dollar funding stress and increase liquidity for European banks. Those banks had been tumbling lately amid fears about a run on the system. But following this news, they're sharply higher, driving up the broader European markets.
One European bank not participating in the rally is UBS. It's tumbling 9% in Switzerland and in U.S. trading. The bank said that it may report a loss in the current quarter because a rogue trader in its investment banking division ran up $2 billion of losses through unauthorized trading. The trader has been arrested by London police, and UBS says that none of its clients were affected. And one other big stock decliner to tell you about this morning is Netflix. It's sliding 15% after lowering its third-quarter subscriber outlook. The move follows the company's decision to split its streaming video and DVD services and raise prices.
Investors are largely shrugging off that bad news, instead focusing on their optimism over Greece and the latest move from the ECB. Those developments are prompting a big surge in the euro, to nearly $1.39 against the U.S. currency. Traders' appetite for riskier investments seems to be returning, pushing up stocks but also helping most commodities, including crude oil. It's rising back near $90 a barrel. And as risk assets rise, traditional safe havens such as gold and U.S. Treasuries decline. Right now, gold is dropping back below the $1,800 an ounce mark, and investors are selling out of Treasuries, pushing the yield on the benchmark 10-year note up to 2.1%. That's the latest from Weiss Research. Have a great trading day.